Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
Now, let's say you believe volatility is going lower. Maybe there's a big announcement that's about to come up, and let's say that implied volatility is just through the roof. Let's say that we have an event like what happened a few years back when Quebec was going to just leave Canada, and that they were going to just form their own country, so to speak. Well, with that being the case, the implied volatility on the loonie was very high. And the next day when they decided that it wasn't going to happen, implied volatility went a lot lower. Well, for people that sold straddles, they did really well on that. Now, let's say, for example, that Quebec really would have formed their own country, so to speak. Well, if that would have been the case, there probably would have been a lot of movement in that underlying, and the people that sold straddles would have been in the hurt locker. With that being said, you must respect the other factors of option pricing when doing this, and you need risk management for any style of trade. What I mean by that is, let's say you were going to sell a straddle, you need to respect the fact that if you have a lot of market movement to the upside or the downside, doesn't matter what the volatility did. If you get enough movement in that underlying, it can hurt you in a way greater than volatility can help you. Not every time, but once again, this is something with which you need to be aware of, and bottom line, never fly blind. Now, the final reason with which to consider a trade like this is for that of theta. I'm not able to guarantee many things, but I will guarantee that the sun's going to rise tomorrow. And if for some reason that it doesn't, well, try and find me, because you won't have any light to find me anyway if the sun doesn't rise. That's the only assumption of what is a fact in the option trading world. The sun is going to rise the next day. With that being said, time decay is something that works against an option every day. No matter what. You have time decay working against you if you're an option buyer, no matter what. Now, does that mean that all option buyers are dumb and all option sellers are smart? Good gosh, no. There's no inherent advantage to either buying or selling an option. But with that being said, you do have time decay as one of the factors working in your favor as an option seller. So with that, a short straddle or a short strangle takes advantage of that. You have option values you have that time decay working in your favor without a doubt. However, what's working against you is that you have a naked option. You have two naked options on both. You have one on each side. You need to respect the fact that if you get too much market movement, delta is going to trump theta. So it's all about shifting risk with the way you want to set up a trade. So no matter what you do, as you're setting up trades like this, make sure that you understand and respect both sides of the market when doing such a thing. Now, why currency options? A couple of reasons why I like on the trading side of currency options, there's no preconceived notions. Me personally, I'm a long-term bull in the stock market. And I believe that throughout time, over the next 10, 20, 30 years, the stock market's going to go up. I really believe that. But when people say, well, where do you think the stock market's going? I always tell them, well, we're long-term bullish, short-term cautious. From the standpoint to where we hedge ourselves in that if we have another happening like 2008, if we have another occurrence like the stock market crash of 87 when the market dropped, I believe it was 22% in one day, like the S&L crisis of the late 80s, early 90s, like the dot-com bubble, and so on down the line, we're ready for it. In that we have our portfolios for our clients hedged in what we believe to be a very efficient manner. With that, I have a bullish bias on the market. If someone were to come to me as a trader and say, well, what do you think about shorting this stock? Or what do you think about buying puts on this stock as a trade? I'm not saying that I'd never do it, but I already have that notion in my brain that the market goes up throughout time. Now, whether I'm right or wrong, that's up to you to decide. But the point is that I have that working against me. On the currencies, I don't have any preconceived notions. I wasn't raised to believe that the euro is always going to go up. I was not raised to believe, and I did not have things spewed at me in every marketing aspect of the financial services world of a direction of a specific currency. Currencies are part of a gigantic overall market. So with that, anything you do with stock market options or with the stock options, you can do with currency options. So let's say that you suffer from the preconceived notion with which I suffer on the stock market, and you want to be able to play both sides of the market. You want to be able to look at a market and be long or short a market. Currencies can offer a good alternative as a trader. Now, as a long-term investor, I'm a huge fan of using them as a hedge. We have clients that are with which we have them using them as a hedge against the overall marketplace. I love the option product because it's a limited risk style product. Now, with that being said, a lot of times, we didn't go through it today so much, but if you were to look at the markets dropping like they did in fall of 2008, the U.S. markets dropped less than a lot of other markets. And the reason for that, I really believe, is because the U.S. dollar was stronger during that time frame. Now, there's no way that I can guarantee or prove anything, but I believe that there is a reason for having a hedge going on. So with that being said, the U.S. stock market, let's say, increases more than another country. Well, maybe it doesn't. Currency plays a value in it. With that, a lot of advisors have clients in overseas mutual funds. And I'm not against overseas markets per se, but if you're getting in them to have exposure to an overseas currency, that I'm not a fan of. If you like the stocks overseas, great, wonderful, awesome thing. If it works for you, everyone's different. But if you're using foreign stock as a way of getting currency exposure, or foreign bonds for that matter, as a way of getting currency exposure, I'm not a huge fan of that, just from the standpoint that I think it's much simpler to take a smaller section of your portfolio and use options to have that specific exposure in a well-diversified portfolio. So you're getting the same result, it's just in a different method of doing so, in a more direct method. If you want exposure to any of these currencies, I think this is a great product to use, and we practice what we preach. Now, a little bit about what we do at Know Your Options. We do managed trading and managed investing. So if you're looking for someone to manage your money with your long-term portfolio, if you're not happy with the mutual funds that you're using, we use options in the longer-term portfolio, not for purpose of leverage, but for purpose of hedging. Our philosophy in the long-term portfolio is we try and make money by not losing money, so to speak, and that we're very focused on down years, and that how well we perform in the down years is a measure of our worth, so to speak. Now, with that, instead of using diversification, well, we use diversification, but instead of justifying that as downside risk management, we use options. We'll give you real factual numbers of, if this happens, this is how much you will lose. If you don't like that, then we'll adjust it, and we'll get it set up to where it's customized to what you want to get. We also do managed trading. If you don't have the time to trade your account, we will trade it for you on the short-term side of it. We also offer a self-directed brokerage with added value. We use the Brokers Express platform, which is the same as the Options Express platform. And with that being said, it's the same just from the standpoint that Options Express owns it, and that's what we do. So let's say that you're looking to learn to trade, but you just want to call someone before you make a trade on the online account. That's the service with which we offer, in that you can call and say, hey, what do you think of YUK today? What do you think of EUU? What do you think of XYZ stock? And we'll be able to give you our opinion, as well as a little bit more about what option strategy might make sense to you. Business hedging. If you are a business and you have overseas currency exposure, let's say you ship things internationally and you're looking to hedge various currencies, we offer that service as well. Contact information, you can go to knowyouroptionsinc.com. That's Inc spelled I-N-C. If you have any questions from me, feel free to send me an email. And if you want these slides, feel free to send me an email, and I'll be happy to send them to you free of charge. Or if you want to get on our newsletter list, you can send me an email as well.
Thank you for participating in this week's session. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.